The federal government backs government loans, and Ginnie Mae is the investor that sells these mortgage-backed securities. The three loan types are FHA, VA, and USDA. You commonly hear these loans referred to as first-time buyer loans, but they are not limited to first-time purchases. However, these loans are limited to a primary residence. Government programs are very popular because of the low down payment, flexible credit criteria, and low reserves. The downside of these loans is that they have county loan limits, mandatory mortgage insurance, and condos must be on an approved list to qualify. Also, government loans are self-insured, not privately insured like conventional loans. We'll look at an FHA loan in this video.
Let's look at the pros and the cons. We'll cover the FHA pros first. The program requires a 3.5% minimum down payment. It allows 100% family gift for down payment and closing cost, and it allows a family member to co-sign if needed for qualification. Credit scores as low as a 620 are acceptable, with minimal impact on the interest rate. No cash reserves are required. 2 years after a Chapter 7 bankruptcy discharge with reestablished credit and the minimum FICO score, you can apply for an FHA loan. 1 year of on-time payments after a Chapter 13 bankruptcy with court permission to purchase a home and the minimum FICO score required, you can apply for an FHA loan. Also, debt management programs are viewed the same by the lender as a Chapter 13 bankruptcy. Also know that these rules don't apply for conventional loans. There is a 3-year waiting period after a foreclosure, a deed in lieu of foreclosure, and a short sale. FHA allows a closing cost credit up to 6% of the loan amount, but it cannot exceed the actual cost and there is no cash back. FHA interest rates are traditionally lower than conventional loans. Now for the cons. You must be purchasing a primary residence only. There are also county loan limits. Those loan limits can be found at our website under resources and FHA links. Condo projects must be HUD approved. That's also available on our website in the resources section. Condo owner occupied must be listed on the appraisal, and it must adhere to the FHA condo guidelines. There is double mortgage insurance on FHA loans. There is an upfront mortgage insurance premium and a monthly mortgage insurance premium. I covered this also in other videos. The appraiser can require health and safety repairs, and any default on a previous government loan can disqualify you.
FHA interest rates can be about 0.5% lower than a conventional loan, which helps ease the pain of the mortgage insurance. FHA has an upfront mortgage insurance premium, which can be financed into the loan amount, and an annual mortgage insurance premium, which is paid monthly in the mortgage payment. The rate and duration of the annual MIP is determined by the mortgage term and the LTV, where the upfront MIP is currently 1.75% of the base loan amount. Just a quick note, the upfront MIP can be paid in full at closing, but it's not common. HUD's mortgage insurance rates have changed several times over the years, but whatever the MI rates and rules are at the time the loan is started will remain for the term of the loan. Let's look at 2 quick examples.
A 30-year term with 3.5% down and a 96.5% loan to value. A $200,000 purchase price and a $93,000 base loan amount. We take the upfront mortgage insurance premium rate of 1.75% times the base loan amount of $193,000 equals the financeable premium of $3,377. Then we take the base loan amount of $193,000 plus the financeable premium of $3,377 to get the total loan amount of $196,377. The monthly mortgage insurance premium rate of 0.85% times the total loan amount of $196,377 divided by 12 gives us the monthly premium of $139.10. The monthly mortgage insurance premium will continue for the term of the mortgage. Now we'll look at a 15-year term with 10% down and a 90% loan to value. We'll still use a $200,000 purchase price, giving us a $180,000 base loan amount. The upfront mortgage insurance premium rate is still 1.75% times the base loan amount of $180,000 equals the financeable premium of $3,150. We take the base loan amount of $180,000 plus the financeable premium of $3,150, which equals the total loan amount of $183,150. The annual mortgage insurance premium rate is now 0.45% times the total loan amount of $183,150 divided by 12 equals the monthly premium of $68.68 that is included in the mortgage payment. The monthly mortgage insurance premium will continue for 11 years.
FHA appraisers are required by HUD to not only determine the property value, but to perform a detailed property inspection for any health and safety issues that should be resolved before closing. FHA appraisers are unique for this reason and have caused fear in the real estate community for those who don't understand how to navigate their buyers and sellers properly. Basically, there could be some minor repairs required that can be negotiated in the purchase contract. If there are major repairs needed, FHA offers a 203K rehab loan to cover those improvements. Worst case, if the home is in very poor condition, find another home in good condition to purchase. Check out our website in Resources FHA for a list of typical repairs. FHA offers a 30-year and a 15-year fixed-rate mortgage and a 30-year adjustable-rate mortgage for both purchases and refinances. FHA will finance a single-family residence, townhouse, condo, manufactured home, and a duplex if one unit is owner-occupied. FHA loans are also compatible with city and county down payment assistance programs, and that covers FHA loans.
Thank you for watching, and here's how you can help us. First, share us with your network on Facebook, Instagram, Twitter, and YouTube. Secondly, tell your family, friends, and coworkers about us. And lastly, we are publicly funded and need your help keeping our videos free by clicking on the Support tab today. Don't miss the tips and timing video, found only on our website, for all the ways that you can save hundreds of dollars when buying a home.